welcome on board Sandip Sabharwal to help us navigate the news flow that we have this morning. And Sandeep, the biggest one, of course, being GDP. What do you make of the slowdown? Because people are trying to find reasons around it as to, whether one should look at the nominal number or it's just manufacturing or it's a backward looking data and all of that. But what's your key takeaway and what's your sense on consumption right now?
GDP data, whenever it's released, is obviously backward looking because of the fact that the reports of the companies have already come in. So the second quarter results in general were disappointing, and those by themselves reflected a growth slowdown. And all of us knew that there was a growth slowdown. It was just RBI which was maintaining a very high forecast of growth, which looked very improbable. So I think that reporting has come in. Now, second half obviously will be much better given festive demand, marriage season demand, delayed harvest, and uh, much better agri product pricing this year vis-a-vis last year. On the flip side, urban consumption could still remain a bit stressed because of uh, the incomes not moving up to that extent as inflation has moved up over time. But second half will be better than first half, but monetary policy and fiscal policy both are not very supportive of growth at this stage. So we need to see whether we can break out of this 6.5, 7% growth rate, which is required for longer term growth sustenance in terms of consumption, or we get remain trapped here.
Sandip Sabharwal has been quite bullish on HUL. And for the first time, Sandeep, I was reading it over the weekend. HUL is saying that we want to get into high growth areas, premium face care, premium, beauty care areas. They want to really accelerate what really could be called as high growth. And for HUL high growth, Sandeep, it has to be a couple of 100 quarters.
So I have not been bullish, but I have not been bearish. I would say like that because my view was that whenever many of these consumer stocks fall around 30% from the top, then we have to take a closer look at them whether they come into buy range for a 15-20% kind of return target. So as a caveat, I'll say we haven't bought into this stock as of now because I was looking more near the 2200, 2300 range to get in. Whether it goes there or not, one, we'll have to see. And if it does not go there, whether there is some growth acceleration which makes us a buyer at these prices or not, that's also something we'll see going forward. But strategically, I think they seem to be realizing that they need to do something different to grow faster than what they have been doing, given the competitive intensity coming in from new generation players, new categories of products, etc. So how that plays out, we'll need to see. But at least the realization seems to be there.
Sandeep, purely in terms of price action for Adani Group of stocks, I know you don't track them, I know you don't invest in them, but let's look at the price action. They pretty much have retreated whatever they had lost after that whole bribery issue. So from a market standpoint, A, these group of stocks which were volatile, they've come back, and B, these group of stocks represent market mood and market momentum. If they make a comeback, that is also an indication of market mood stabilizing.
Yeah, so in general, the market mood today is mixed. Like there's a category who's bearish, there's a category who's bullish, but overall, I think market move is much better for the overall market because when there is excessive bullishness, it's not really good. So I think uh, we need to have a scenario where there is some amount of bearishness also among a category of investors or traders for the markets to stabilize. In any case, I think markets are reasonably okay because most negatives seem to be in the price, and the GDP print number will also push the Monetary Policy Committee to take a more constructive stance. So I think this time's meeting, which is over the next few days itself, also will become critical because if they continue to maintain their tight liquidity, tight monetary policy stance in the light of whatever we've seen on the GDP side, then I think near term the upside will become restricted. So we need to see that monetary policy stance also. But overall, net, I think 2025 should be a reasonably good year overall, because today the consensus trade is long dollar, long US equities, and the overweights on that are so excessive that normally and the consensus view is so drastic on that side, that normally the reverse plays out, and we could actually see emerging markets and emerging market currencies do better in 2025.
And we've discussed the large cap stocks here in terms of where does a HUL stand, where Reliance is headed. But where the surprise has come, and we've discussed this one last week, but I want to revisit it, is HDFC Bank. It is at a new high. And it has gone to a new high this time without getting unnoticed. You know, when HDFC Bank would move, it also would have this halo effect that HDFC Bank chalne laga hai, private banks would latch on to it. But this time it's just this quiet mover. In last 3 months, it's up 9%. But more importantly, it is outperforming markets and it is outperforming Nifty. Sandeep, just like a cycle for HDFC Bank, has the cycle turned? Where first the merger excesses, then the balance sheet contraction and cleanup, and now growth. These concerns, in a sense, had sabotaged that stock. But just like you made a point that everything is a cycle, for HDFC Bank, do you think 2025 could be beginning of a new dawn?
Yeah, I think once they stabilize the credit deposit ratio, they could start focusing on growth. Asset quality remains strong as always. And HDFC Bank today is gaining from the fact that many other banks and other smaller financial institutions are actually facing NPA issues. And typically, when that happens, there's a flight towards quality or banks or large finances where people see that to be less of a concern. So HDFC Bank has been prime beneficiary of that. ICICI Bank has gained, but it never fell. So to that extent, the gains have been more muted. Now, whether HDFC Bank will outperform more, or some of the NBFCs or other banks could come up, will depend on the monetary policy stance, because an easing monetary policy typically is more beneficial for smaller financiers rather than larger banks. So that's something we'll need to see.
Okay, let's also get in a sense then, Sandeep, from you as to what your reading has been on the auto sales numbers for the month of November. Given that it's the last festive month that the auto sales companies have clocked in, how would you read into the fact that it's been a bit mixed?
Yeah, so November dispatches are a post-festive season, because the October dispatches are the ones which get sold, or the September-October dispatches get sold in the festive season normally. So numbers are obviously mixed. So on one side, from the two-wheeler data, what we've seen, TVS has done better than expectation. Hero MotoCorp has done lesser, because Hero MotoCorp has a habit of flooding the system with more inventory. And then when the sales don't pan out, then the primary sales go down. Maruti numbers seem to be pretty good, and they are the ones who actually corrected the dealer inventories, and the management said that we are back to normal last month. And on that comment, a 10-11% growth with higher premium segments doing better is a good growth. So I think from whatever numbers have come out, positive seem to be from TVS and Maruti.
Pharma, you have to now, Sandeep, I just want to spend a minute on pharma. This sector is growing at 6-8%. It is even lower than India's nominal GDP. There are specific companies which may do 15%. An odd outlier may do 20%. But the excitement in this space, Sandeep, of late has been absolutely palpable. Why is that?
Sectors go through cycles. So pharma had a big up cycle and outperformance cycle many years back. Then it fell out of the radar, and then stocks became very cheap. So when stocks become cheap, and then we see an improvement in profitability cycle led by lower input costs and higher sales. So then even a 8-10% growth in sales can lead to a 15-20% or more growth in profitability. And that's something which we have seen for many companies. And that's led to another round of re-rating. The second is obviously the CDMO story. So that's more on the smaller companies, now, and many mid-sized companies. So many investors are interested in that. I don't buy so many mid or small cap pharma companies due to my inability to understand their balance sheets and cash flows. But then there are companies which are doing work there and getting investor interest.
RBL Bank in what a value destructor this one has been. This was like everybody started calling it the Chota HDFC Bank, right? Okay, they had growth, they had momentum, then they had tie-up, they were in MFI space, they were in credit card space. Guess what? That space has reversed. Credit card has been on the receiving end largely because of slowdown in RBI compliance. And for RBL Bank, it's been a string of disappointment, which in a sense has really, caused this kind of an upheaval. On the other side, a bank which has really rose from the ashes, so to speak, like a phoenix is Federal Bank. They struggled for 2, 3, 4 quarters. They kept on delivering, nobody recognized it. But in this year, when the bank nifty in a sense has struggled, Federal Bank has gone from 140 to 210. Change of management, good balance sheet, profit on course. Very few banks actually have a balance sheet size or a profit potential of 4,000 crore or $500 million outside Nifty 50. I mean, this could be one of the rare banks outside Nifty 50 where they're on course to report something like 4,000 to 4,500 crores of PAT next year. Sandeep, anything in the mid-tier banking space which could be a good contra buy? For example, a year and a half ago, Federal Bank was a great buy. Do you see there are bargains in the MFI space? Do you see there are bargains in the NBFC space? Because now no one likes it, Sandeep.
So smaller banks, I don't normally go for, but NBFCs, yes, a monetary easing cycle, which should play out in India also, whether it starts from December or February, we don't know, but it has to play out, is always more beneficiary for NBFCs rather than banks, because banks have their CASA deposits, NBFCs are more bulk borrowers, and rate cuts typically tend to benefit them more. So I would think that large established NBFCs, which could include now, this should not like it could include stocks like Bajaj Finance, which has underperformed significantly, L&T Finance, M&M Finance, or a few others possibly with a good pedigree and established large group managements. I think these could be outperformers for 2025.
Okay, meantime, you've also got some other brokerage notes that have come out this morning. And apart from HUL, there are other counters like a Bajaj Finance, and Jefferies has maintained a buy with an 8,400 rupee target price. They're saying that medium-term earnings impact is going to be limited, and there are concerns on the credit card driving Bajaj Finance to exit the co-brand credit card market. Just curious, Sandeep, as to how you've mapped the journey of a Bajaj Finance, what you're advising one do at the current levels of 6,500 thereabouts?
Although we don't own it, but I would think that given 3-4 years of underperformance, growth in the balance sheet, and their ability to reasonably control asset quality even at a time when the pressures are growing, that combined most importantly with a potential monetary easing cycle holds it at good stead. So I would think that from here on, there's a very high probability it could be an outperformer.
Okay, so that's the take coming in on some of these stocks and individual names. But
if you like this video, then like, share and subscribe to ET Now.